The forward rate bias is the well-observed tendency of a portfolio of currency positions that are long high interest rate currencies and short low interest rate currencies to generate an excess return over time. We believe the reason it makes money is because there's a sustainable and independent risk premium that underpins the forward rate bias.
You can only run a deficit as a country. Let's take the US. You can only run a deficit if you can persuade the rest of the world that year to invest new money in your currency.
In doing so, they're taking on risks that are attached to those deficit countries' currencies, and they'll only rationally take on that risk if they're being paid to do so. And that's what we mean by a risk premium, and that's why we believe the forward rate bias is a risk premium as independent and sustainable as the equity risk premium.
So we've launched this FRB 10 fund, and the purpose of the fund is to replicate as closely as possible the index that FTSE and us have jointly developed.
FTSE Group and Record have entered into a partnership that combines our experience and expertise in currency markets and currency management with FTSE's noted expertise in producing indices. For the FTSE Currency FRB 10 index, there are 10 developed market currencies that make up the index, and by pairing each of those currencies up with all of the other currencies in the universe, one comes to 45 pairs. The index therefore takes positions in all of those 45 pairs, with the only decision being which way round you are, so always going long the higher interest rate currency in each pair.
I've been asked the question of why has currency not appeared as an asset class for about the last 20 years. Our feeling is that now one can distill one aspect of currency, the forward rate bias, which is so close to the equity risk premium in concept, and its function is so like that of the equity risk premium, recycling money from those that have it to those that want it, that we now think that's characterizable as an asset class. And I mean a proper asset class, not a skill class.
The FTSE FRB 10 index dates back to 1987, and that gives us a very robust set of data with which we can compare returns from this strategy to equities or bonds. And what we typically see over long periods of time is that we've got returns that are at least comparable to those of equities at volatility that's much more comparable to bonds.
So Record's a company which has been around now for 27 years. I founded it. One of the few things we don't try to use in the design of our processes is economic forecasting. The company is based on a systematic exploitation of what we regard as persistent inefficiencies rather than short-term forecasting. Record has grown and developed over, as I say, nearly 30 years. It manages now $30 billion of institutional investment monies. It has hedging products on the one hand and full return products on the other.
The FRB 10 fund that Record has launched is a passive index tracking fund, so it replicates exactly the index constituents of the FTSE Currency FRB 10 index and does so in a very efficient and transparent manner.
In effect, we are like a passive manager, a tracker manager. This is the first currency fund which allows an investor to invest in a pure currency beta, or to put it another way, in currency as a pure asset class rather than as an asset class mixed with skill.
We see this fund as an attractive investment opportunity for institutional investors who think about the forward rate bias, who come to share our conclusions it's a long-term, fundamental, sustainable return stream, and who therefore want a strategic allocation to this strategy in their investment portfolio. For those investors, the FRB 10 fund represents a transparent and cost-efficient way to gain precisely this return stream.